This is our Forex blog for August 26th, 2013, and I like to just highlight some of the easier ways of trading with our software. As you know, if you've listened to our blog videos, I am focused 100% on creating automated systems, which will benefit our traders in that you can see these same trades on your charts and manually decide whether to take them or not. We work with brokers that most retail traders don't have access to. That's why we're not going to offer automated systems in the software, but you can get the signals and take your trades. That should be released in about 7 to 10 days. So these are our currency indexes, which I think make trading very easy because it lets you see what each individual currency is doing on a chart, and you can visually see it go up, you can see it fall, you can see the hourly moving average in gray. Green shows the 15-minute moving average. You can see the point of control of the previous day, which is where most traders have positions, and in this case all of the pound pairs for the previous day. Coming up to it from underneath, it tends to be major resistance. You can see the previous day's low and dotted red here, previous day's high and dotted green, and it just gives you a wealth of information. Basically, you want to buy the strongest currencies versus the weakest and sell the weakest versus the strong. So let's start the day off, and you can see anytime you see a currency kind of going nowhere for many hours, 3 to 5 is pretty much ideal, and when it breaks out, it's going to, in this case, likely go up to this area. If it breaks through there, it's likely to stall at the previous day's high. And if you were wanting to sell the dollar, those would be areas that you could look to sell. This breakout is very high probability. So which one would you trade it against? Well, not the yen, which is just made a big wave up. It made a 50% Fibonacci pullback, found support the hourly moving average right here. It's likely to go up. And so one that's likely to go down would be either the pound, because it's at a major resistance area. Ideally, it would be underneath the hourly, but it's not. And you can see the euro kind of went down, went sideways, down. It's retracing back up. This is about a 50% retracement right here. This would be a good one to be trading the dollar against. You want to sell the euro dollar. So let's bring up a euro dollar chart, and around 6 o'clock we're going to be looking to sell the euro dollar. Now the key to trading is small losses, big wins, and you can see on this trade right here, a little bit after 6, you're looking to sell it. Didn't immediately fall, you know, it fell a little bit, came back up, fell, came back up, fell, but the trend was clearly down, and our software lets you see that you were focusing on trading in the right direction. At this time, when this makes a retracement back up, you always want to see the highest high and the lowest low. This is a 38% retracement right here. Pretty high probability place to sell. At 6 o'clock, the yen had been trending up, and it is at probably close to a 50% retracement. Actually, only 38% hourly moving average is there, and it also has major support at the point of control, where most traders on all the yen pairs had positions on Friday. So there's tons of support underneath it. This one's likely to go down, this one's likely to go up. So at 6:30, if you look at the euro yen, it's a very high probability trade to go down. And if you looked at this chart at 6:30, you can see it's kind of been going up here. It looks pretty strong. You might not have been looking for sales. And so if you got short right here, you had a small profit. You got short right here, you can see it went from around 90 all the way down to 55. Very big and pretty much straight down move. And that's how we use our currency index. It allows you to anticipate future trend direction. Now, if this doesn't make any sense to you, that's okay too, because we're working on, like I said, automated systems. And one of the things that's going to benefit you is you'll be able to actually have these signals show up on your chart. So if you, let me put this all on the chart here. If you have no idea what you're doing, ideally underneath the hourly moving average you want to look for sales. So you got this short right here, it went down about 15 pips. This one right here fell about 15 pips. If you missed that one, there's another signal right here, it fell about 20 pips. Counter trend trade here went up about 15 pips. This one trade right here failed. This one, you know, you might have lost 5 pips on. And anytime you get sell signals, especially 2 in a row, You might, if it does make another wave up and you know, has a bar that closes down, you might get short here and get most of your loss back. This trade here worked because the market made a big move up and it broke the hourly moving average, so we're looking to buy the next pullback. If the market's not statistically too weak, comes back up here and double tops. Notice I'm measuring where all the swings are. So anytime you have a double top at a major resistance area like the hourly, great place to go short, and it fell from 90 all the way to 55. Very high probability. And right now my signals are showing up after hours because I'm testing them, but I pretty much am not taking trades after about 12 or 1 o'clock in the afternoon, and I don't think you should either. So you can ignore those. That's the euro yen there. Here's the euro dollar. Actually, here's the pound dollar. I don't have the euro dollar up right now. You can see this sell right here fell. This one, you know, did go 1 bar your way. I consider them mostly a success if the market follows through. You would get in on the close of this bar right here. This is a double bottom pattern 1. You're going to just see buy and sell signals on your charts. You're not going to know what the patterns are. There's over 60 of them right now, and usually I add 1 to 5 a day depending on the day. Lately I'm just bulletproofing my existing ones because I'm not finding too many patterns that, you know, are new. With over 60 patterns, obviously there's the time spent adding new ones each day goes down, and I'm just spending more time bulletproofing the existing ones, putting in more rules to kind of get rid of the occasional loser without getting rid of the ones that work. You know, you want to catch the 10 to the 50 pip moves, and you want to get rid of as many of the 5 to 7 pip losses as possible. But you can see this trade worked, this trade worked, this one was huge. This buy here, you know, it was already gone up a lot, so you know, if you got into this one here, the odds of getting a 20 or 30 pip move is pretty slim, so it goes up and has a wick and closes down. You might get out with 4 or 5 pips. Same thing with this one. But at least the trades go at least 1 bar away. I consider those a success, mainly because the way I trade this, and I oftentimes trade them manually too. When you get into a trade right here and your stop's here, when it goes up 1 bar, I'm moving oftentimes my stop up here, and I'm watching it, and if it goes above the previous bar's high and comes back down, a lot of times I'm getting at these trades with, you know, 1 or 2 pip or sometimes 3 pip profit versus having a loss. Or if you don't do that, you get out right here and you lose 3 pips. It's very easy to get a 3 pip profit back. In fact, even this one right here that didn't shoot up, you can see you're in, went up 5, 6, 7 pips. After your spread, you made 4 or 5 pips. You know, even this crappy trade right here got back your loss. So let me bring up the euro dollar to finish today's. Not many trades in the euro dollar today, but you can see some days there's a ton of trades, some days there's not. Depends on the currency and depends on the volatility. Most of our methods are looking for swings, so if the market doesn't make too many swings, there's not going to be that many trades. Obviously, the more swings it makes, the more trades it makes, and obviously the more swings it makes, the more it's moving around, so obviously the more trades it makes. It's just common sense. This one right here kind of failed. And again, these are trades we're not usually taking. Primarily my automated system's taking them after 3 a.m. Eastern time up until about 12. So I wouldn't have taken this trade even though it's, you know, had worked and it's still working. But you can see this trade here worked. This one here worked extremely well. This one here failed. Obviously counter trend. It was a fib level from a previous swing too, by the way. You know, if you look at this big move down, it's at the 62% retracement level. So, you know, that's a good trade overall. And even though the trade didn't work, at least, you know, you got into this trade here and it failed. And some trades like this Fib 4 right here, if there's any kind of Fibonacci trade that fails, if there's a 3-bar pullback and then closes back at or near the Fib areas, it gets short again. And you can see it fell from 90 all the way to 65. You know, you're never going to catch every pip, but it obviously doesn't take that big of a move to get back a small 5 to 6 pip loss on a trade. And this one big win here, you would have still been actually in this trade if you were manually trading it. You're kind of waiting for it to go below the low by a pip or 2, you know, so you get out of your long right here, short, kind of going sideways. You can avoid a lot of losses by manually trading these as well. But, you know, I'm focused on computer trading them, so they're not going to skip obvious bad trades or take trades that can't be easily programmed. Like, for instance, if the market is trending down, rallies back up, and it's going sideways right here, anytime I see it break from above the 62% back down inside this range right here, and then you have a bar that goes underneath it, 2 bars up and a close down, this is the kind of trade that I frequently take myself manually trading, because I had every opportunity after this big move up at 8:30. There's 2 hours, hour and a half right here where, if there was some more buying, it would have went up. It didn't. The previous trend was down, so this is a great place to go short. You can see it fell from around 83 all the way to 63. 20 pip move. Even though it wasn't straight down or straight up like some of the moves, it still was almost a 20 pip move. It's very hard to teach a computer every one of these type of patterns. The humans, professional traders, are much better than computers. But most people just want to catch 20 to 30 pips a day. They'd be very happy with that. And that's my goal with automated systems, even though it's not going to trade it as well as I would or any other professional trader.